We're joined by Andy Mok, Senior Research Fellow for the Center of China and Globalization. Good to see you again. Look, I know we're trying to put a positive spin on it, but most of the markets say they missed the expectation. Why the disconnect here?
Sure. Well, thanks for having me on, Phil. So the most direct way we can understand this headline GDP number is promise made, promise kept, as we heard. But I think actually the real story here with this headline number is even more positive, because we are in an anomalous period in terms of inflation in China. So it's roughly 0% inflation. On an apples-to-apples basis, we look at nominal GDP, which is the reported GDP growth less inflation, more or less, to get to the real GDP growth rate. So by comparison, if we look at the U.S., which is estimated to come in at 2.5% GDP growth in 2023, with a 5.7% inflation rate, the real economy actually contracted in the United States. However, with China, we add, say, 2% inflation. The real number, the nominal number, say, is closer to 7. So I think this is a much better number. We see exports picking up. The increase in exports in December was higher than November. I think there's reasons for optimism looking ahead, in addition to the Federal Reserve, I think, looking at about at least 3 quarter-point interest rate cuts in 2024. So I think the economic fundamentals in China are solid. But you raised an excellent question about the disconnect between the real economy and markets.
Right. Look, let's just take the Chinese stock market and the Hong Kong stock market. Clearly, there are challenges there. Now, maybe the foreign investors, maybe they haven't dove deep enough into the numbers, or maybe there's some question marks. So I don't want to get into the politics of that necessarily, but money is money. I don't care where you are from. We all want to invest in companies that make money. The companies that make money are the ones that have the economic growth, right? So either it's a PR issue that Beijing needs to do better and sort of share the good news with the potential investors, or the companies need to do a better job of being more transparent about how good or not good the companies are doing. It just seems to me that we're seeing different headlines.
Absolutely, Phil. So if you look at A shares of the Hong Kong Stock Exchange, there clearly is a disconnect here. And one understand, as Warren Buffett likes to say, the stock market in the short term is a voting machine. In the long term, it's a weighing machine, meaning that in the long run, the economic and financial fundamentals matter, growth rates, earnings, et cetera. In the short term, it's largely sentiment driven. So it's more of a popularity contest. So I think this is a part of it. That being said, I do see some glimmers of positivity here. So, for example, recently a UK hedge fund has started selectively buying Chinese real estate bonds, clearly at a deep discount. But the fact that they're moving into the market, I think, shows that at least some foreign investors believe that the worst is behind us. Sunak, a well-known major real estate company in China, recently announced a successful restructuring. So it's important to point out here, this does not mean necessarily that the real estate market in China is immediately bouncing back, but at least we're seeing a path towards better days ahead in real estate. That being said, Phil, I think that unfortunately politics does matter a lot here, because I think what is causing a lot of hesitation for foreign, especially institutional investors, is the geopolitical risk.
Right.
And I'll just give you one very concrete.
Andy, I've got 30 seconds. We've got a scratchy line, so I hope you can hear my question. That said,
Sure.
Even if I 100% agree with you, are you saying that Beijing doesn't need to take more steps to stimulate the economy? Because some are asking for Beijing to do more.
Well, I think any government can always do more to improve the economy. But I think what these last year's results show is that without extraordinary monetary or fiscal stimulus, the economy actually did pretty well. So clearly, foreign investors would like more, and this is a balancing act I think that China has to strike.